Well, Tesla is following the markets around this morning. There's absolutely no negative news that I can find that would cause it to be moving lower on its own steam. So we're going this morning to make the assumption that Tesla is just following the market. Now, of interest is that Brian Wang last night said that 420 to 470 was the range, and if we go under 420, it might be potentially looking at going even lower. Right now, last time I checked, we're at 415. Of course, we'll check at the end to see where we are, but it would have to close under 420 to fit that criteria. Uh, you know, uh, Dry powder, anybody? It's not investment advice. But on the other side of the coin, we have tons of good news. And you would think, if anything, the stock will be up this morning. Sawyer Merritt, I'm going to use him first among many to describe the drive, the rides, the videos that are out right now about 14.1.7. Sawyer Merritt says Elon says FSD 14.2 will fix the remaining sudden braking hesitation issues that are currently in point 4, 14.1.4. However, Black Model 3, which is BLKMDL3, mind-blowing first drive with FSD 14.1.7. 30-minute drive with zero human input or intervention throughout LA traffic from the Marina Del Rey to Century City Mall and into the garage. Some huge improvements with this build. Big smoothness upgrades over 4.1.4. Saw zero hesitations on the car, or the car even considering stuttering the brakes. Zero. Smoother acceleration curve, especially 0 to 5 after stop sign and stoplight. This is something many people are mentioning now, is that it slows down a little. It doesn't slow down quite as it it is more human-like, even though it gives a full and complete stop. I'm not sure how to describe it now. Smoother, entering garages, it's taking a better line. Braking feels even better than 14.1.4, and much more. This feels like it could be 14.2. Zach comes back, and that's a Zach, by the way, is Black Model 3. He comes back later and says, the way it thinks and processes things are superhuman. This is after 10 drives. No other way to describe how quick it adapts and reacts to things. I'll have a lot more drives tomorrow to post, including some videos I took tonight. I have to export and post. 14.1.4 was good, but this is the best combo with the predictability and comfort of version 13 with the feature stack of version 14. And Sawyer Merritt comes back again. He says, here's my first drive. No interventions the entire drive. Overall, no major issues. It does feel a little smoother. Mad Max mode also seems to have a slightly lower top speed on the highway and drives more comfortably. Then we've got Dirty Tesla, who is a major contributor to all this stuff. He says he just drove 14.147 over 30 minutes. It was 100% smooth. No brake stabbing. Great job. All right, so that's just a smattering of the comments. They all seem to say the same thing, so I thought that would be enough. Then we have this from Business Insider. If you work on Tesla's AI teams, next year will be the hardest year of your life. That's according to the company's vice president of AI software, Ashok Alswamy, who spoke at an all-hands meeting for staff across Tesla's Autopilot and Optimus teams last month. Alswamy said 2026 will be a key test for the automaker. The executives told staffers that they should expect to work more intensely than ever to achieve the company's goals. One person said the meeting was meant to be a rallying cry. Leaders from all across the A division spoke to staffers during the nearly 2-hour meeting. Workers were given aggressive timelines for Optimus production, as well as targets for Tesla's robotaxi service, as Tesla races to launch robotaxis across the nation and ramp up production of the company's humanoid robot. The two divisions are at the center of CEO Elon Musk's biggest bets. Mario Nawfal says that SpaceX is buying the sky $2.6 billion at a time. You may also be aware that I guess the $15 billion raise that SpaceX was working on is now complete. At least that's the headline I saw this morning. SpaceX just dropped $2.6 billion on EchoStar's AWS-3 spectrum rights, prime wireless real estate across the U.S. The move expands Starlink's reach and more quietly Elon's chokehold on the future of global connectivity, internet sovereignty, and he makes it privatized. It's a side deal to the 17 billion merger that the two inked in September, a celestial land grab now waiting on the FCC's blessing. Call it what it is, the next phase of Elon's Own the Pipes, Own the Planet campaign. Today, it's rural broadband. Tomorrow, it's who owns the skies. Now, Cathie Wood, who we greatly admire on this show, and of course have a regular broadcast where Larry and I look into her end of month or her Employment Friday analyses. Well, last week's analysis was amazing, but Larry and I could never put together the time to be able to look at that analysis, and so we're going to do it this Saturday. Cathie Wood, who we greatly admire, after her sales, she has now been selling, I think 4 days in a row, and it will still be the number one position in her overall portfolio with more than 10% in all but one, I believe, of the Ark Invest stocks. Cathie regularly trims her position, partly due to an understanding with her investors to not be more concentrated in any stock than 10%, but she goes constantly over 10% with Tesla. And that's partially because sometimes it makes sense for Cathie to trim her position anyway, because she has other bets that she wants to put some of the portfolio in. Now, she can still believe that Tesla is going to 8x in the next 4 years and still have both of those reasons for trimming Tesla stock. I know it's hard sometimes to get it, but that's the best I can do in analyzing what Cathie is doing. This is Randy Kirk, by the way. If you haven't bought the book yet, you need to buy the book. I really mean it. It is super worth it. Just the Brian Wang parts will be worth it, if you can imagine. And then you throw in 7 other authors. Outstanding. I mean, it's really just an outstanding piece of work, if I don't say so myself. And if you've already bought the book and you haven't reviewed it yet, boy, that'd be fantastic. I would really appreciate it. Now, if you want to get a free copy of the Audible version, you have to join Patreon at the $5 level. That information is down below. The information on how to buy the book as a Kindle at only, I think it's still $2.99. Did I raise it to $3.99? I don't know. It's in that ballpark. The Q3 2025 earnings season is nearing its close. By the way, this is another example of what I'm doing now, where you're not going to get some of the stuff, yeah, I get out of Business Insider or Barron's or whatever, and I just read it to you along with my commentary. But I'm trying to do more and more where I'm doing the original research and bringing you stuff you're not going to see anywhere else. This is an example of that. The Q3 2025 earnings season is nearing its close, with approximately 91% of the S&P 500 companies having reported. Overall, reports have exceeded expectations, marking one of the strongest quarters in recent years. Blended year-over-year earnings per share growth for the S&P 500 clocked in at 13.1%. 13.1%, well above the initial estimate of 7.9% from the end of Q3. The beat rate remains robust at around 80 to 85% across the index. 80 to 85% beats, driven primarily by technology and AI-related infrastructure demand, alongside resilient consumer spending in select areas. However, there are pockets of weakness in consumer discretionary and certain cyclical sectors, which highlight an ongoing macro pressures like inflation and selective spending. So we still have these two economies, the over 100,000 and asset owners, the under 100,000 a year, and people that don't own assets. Key result highlights: S&P 500 aggregate EPS growth of 13.1% year over year, with revenues up 5%. That is a annualized basis. The Magnificent Seven, Apple, Microsoft, Amazon, NVIDIA, Alphabet, Meta, and Tesla, accounted for over 50% of the index's earning growth, fueled by AI investments and cloud services. Guidance has been a bright spot and in recent sessions, signaling confidence in the earnings recovery trajectory. Bank of America notes a 2.0% ratio, 2 times ratio of companies guiding above the consensus versus below. 2 times more companies guiding above consensus. The highest since 2021 and well above the historic average of 0.8x. This upbeat tone has lifted forward estimates. S&P 500 EPS growth for the calendar of 2025 is now pegged at 11.2%, up from prior forecasts, and now accelerating in their projections to 14% up in 2026. All right, I also do a regular ongoing analysis of the Fed governors and presidents who have spoken over the last couple of days to see how they're seeing the economy as well as what might be going to happen with this Fed cut in December. Williams is cautious on December cut. Eyes liquidity management. New York Fed President John Williams has endorsed a cautious approach to further rate reductions, signaling the Fed could pause in December to assess sticky inflation before easing more. Paulson, on the other side, Philadelphia Fed President Anna Paulson, she reiterated her dovish stance, favoring additional rate reductions this year to counter rising job market risks. She views September's 25 basis point cuts as appropriately preemptive. Of tariffs, she says, Paulson argued the Fed can look through tariff-driven price hikes as one-off effects, prioritizing labor support over short-term inflation blips. She anticipates 2 more 25 basis point cuts in the new year. Governor Chris Walker, he says looking for a 1/4 point reduction in December to maintain momentum in disinflation while preventing labor market cracks. Then we've got Governor Stephen Moran. He's the newest guy that's been appointed. He says it's appropriate to ease policy restrictiveness, dismissing recent inflation readings as backward-looking amid forward indicators of cooling. At minimum, he backs a 25 basis point, maybe prefers 50. He downplayed entrenchment fears, arguing high-frequency data shows demand weakening faster than prices. That would be tilting risk toward employment. Here's the Fed to prioritize dual mandate balance, with markets now pricing 75% odds for at least a 25% basis point cut. Then we've got Bostic. She emphasized price stability over labor concerns, viewing inflation as the primary threat despite market shifts. So she's maybe not so sure. Overall, Fed divisions deepen with hawks argue for a pause amid sticky prices, and the doves saying at least 25 and maybe more. Economists still expect the cut in order to support jobs, because we have seen here and there some of this weakness that we've been talking about. The POTUS, the President of the United States, is at 45 this morning, and we have a mixed bag on the, trying to get it here for you because I failed to put it where it belonged. So we have got, here we go, for Truflation. Truflation is ticking up slightly after being down yesterday and the day before. But we're still at 2.55 overall overnight. We've got goods at 2. I'm going to have to get a little closer. 2.85. That's about where it's been. Core down to 2.2. Services at 2.44. That's up a bit. And PCE at 2.61. All right, let's look at where we are sitting with the stocks right now. We have got, let's go ahead and go to Tesla. Tesla is now down to 409.73. That is a 4.85, almost a 5% drop. And that is a continuing drop now, even though the market has perked up a bit. The NASDAQ is only down 1%. The Dow Jones is down 0.15%. S&P is down 0.56, but Tesla is now down almost 5. I'm going to hit and click this just in case there's something new. Nope, there's nothing new. Still no reason, no evident reason other than what we've talked about. In fact, if anything, it should be potentially ticking up this morning. So don't know. Haven't got a clue. When you don't have a clue, don't claim to know. Some people do. We've got the Magnificent Seven in mixed territory right now with Google down 2.5, Amazon down 0.45, Nvidia down 2, almost 3%, but the others are all up marginally, just slightly. We have, oops, the VIX has gone up a little bit again this morning, 18.14. And we have got the Cathie Woods are all in negative territory. Now, you know what I usually think when I see that, although they're kind of all over the place, averaging, let's say, around 2% down. But when I see that, of course, I'm thinking the bonds are up, which earlier they were. So let's take a look at those bonds. We have got bonds, yeah, up 3 full percent, back up to 4.11. This might be impacting Tesla a little bit as well. We have got the oil prices up a little bit, 53 cents, back up to 59. And by the way, OPEC is saying that there's an oversupply all the way into next year. That is part of the reason why it dropped so much the last couple of days. We've got natural gas up 1.99% to 462. Sheesh. Gold has finally backed off, down 830 to 4,205. That's down 0.2%. Silver also backing off 0.8% to 53.03 after hitting an all-time high last night. Got copper up 0.89 at $5.15, and the dollar is mixed. Bitcoin up 445 at 102, and Ethereum is down 0.52 at 5,000, 3,404. All right, that is everything that we know about the markets this morning. Yesterday night, Brian Wang was on. I keep telling you about this. I'm going to keep telling you. I might mention this video in every upcoming video that I do because you need to go back and watch it. Brian talks about the convergence of the three companies, Tesla, xAI, and SpaceX in particular, why Elon is talking about that convergence, why it is potentially a huge deal, why potentially Elon Musk has now unmasked or started to talk about a larger potential TAM than even humanoid robots that all three companies would benefit from. It's a massive deal. You're not going to find anybody else talking about it in the way that Brian can talk about what's happening with his deep research on this subject matter and his greater understanding of the science. So putting that card right up here. Later on today, we should have a regular day with Brad Ferguson and Cern Basher. So looking forward to seeing you later. It has been great, as always, speaking with you. Buy the book, buy the book.